What's going on, everyone? I'm Brian Landeros with Mortgage Heroes, and today I'm joined by a good friend and realtor,
Kevin of M Realty.
Nice. So today we have some very special information and helpful insights of what's been happening with the market and the truth of how you can get ahead and the benefits from what you can do in real estate right now. So that being said, Kevin, what are the two things that we're going to be covering today, and really just jumping into detail of what's been happening in the market?
Yeah, I think giving you guys some information regarding the market in layman's terms, so that way everybody can understand it. I think oftentimes when people go online and they're trying to do research, it's really hard to understand when they're talking about some topics that you guys aren't familiar with. So we want to dumb that down for you today.
100%. Yeah, you go online and you can see so many different variations of the information that comes out, and you're just left with like, what the heck is going on? So that being said, let's jump right into it. I want to cover, the overall performance of what we experienced this first half of the real estate market, and especially here in San Diego in our micro market.
Cool.
What do you got, bro?
So I think like when it comes to demand and values, a lot of people have this misconception that our market's going to crash. And the data will show us that that's not actually what has happened. In fact, what we've seen since January is an increase in home values of 5% each month. So, we only have data to support January, February, and March as of now, but we're up 10% since January. And so that's a good indication of where the market's trending.
Yeah, I know. I haven't seen open houses slow down. There's still multiple offers on the houses that we're submitting, offers on. And as far as the rates for the mortgages, I feel like that's been the trending topic in our industry, and it's due to the fact that the Fed still is battling inflation, which simply means that people are still spending tons of the money that they probably accumulated during the COVID era of the stimulus that the Fed injected into the economy. But all that's still been playing a huge role as the Fed is trying to control inflation, and you've been seeing the federal funds rate rise, which basically means that everything as far as credit cards, auto loans, and student loans are getting more expensive as the year continues. And based on their last meeting, the Fed stated clearly that they're not slowing down on raising rates, so we can foresee rates trickling up for the remaining of the year. Now, I do see some advantages and disadvantages of rates going up and down, but I wanted to get your take as far as, from the real estate side. How has rates impacted the buyers and as far as you as well in real estate?
Yeah, so I think initially in the beginning of the year or late last year, beginning of the year, we saw somewhat of a buyer shock. And what I mean by that is that people's payments or what they were quoted on what they'd actually pay month to month went up drastically. And so naturally, people are going to be hesitant to move forward when they see that. And since we've seen rates level off, and then most recently this week, we've seen rates dip, I think people are getting more confident and deciding that, hey, right now might be a good time for me. Brian and I off air were talking about what unique advantages buyers have today, or what unique advantages individuals have today. And I think that when you talk about like the milestones that people are seeing, or that people are moving into in their life, are going to be a great way to get ahead. Meaning that like if you're a first time home buyer, getting that house is really important because now you're establishing a financial foundation. Or if you're looking to move into your current home, sell that home and get into your forever home, these aren't really investment moves. They're more of life milestone moves. And so I think when we consider those things, we've seen those people making those moves, but then also a lot more people moving forward just because of where interest rates have been in just recent days.
No, 100%. We see the dips and then we see mortgage applications to rise back up. But one of the things that you did mention, and it sounds to me, it's like, having an overall plan and direction of what you want to do, and your milestones, your life milestones are, passive life that you want to accomplish. So I feel taking it from that scope, on the mortgage end, I feel it's an opportunity for right now to really have a financial audit of your finances, see where everything's at as far as your credit card bill, your day in and day out expenses, so that you're able to formalize a real idea of how much it is you really have to budget for when you come to buy a house. And I feel right now, and just in general, as for the millennial generation, buying a house is, your foot in the door to financial stability. And, if you leverage it the right way, this will allow you to go ahead and, use this to either sell for profit and get your forever home, like you mentioned, or be able to build on that through a residual income of rental income that, you get for putting a renter in there. But I think it's a very, very, very good opportunity right now to be able to take the market for what it is. And the competition, although it's still there, I feel there's pockets of deals that are out there for the people that are, pivoting in the right directions and have an actual plan of what their intent to do is.
Yeah, I think in any market, it's a good opportunity if you have consistent work, you have stable income, you can afford the property that you're buying, because regardless of where the market goes, if you're stepping into home ownership, understand that even if you hold that property for 5 or 10 years, eventually the market's going to come back up if it does dip. And so just having that security, I would say, is a huge component of making a decision as to whether you're ready right now.
No, 100%. And moving over to a little bit more specifics and as far as facts, tell me a little bit about the housing inventory and prices here in San Diego specifically.
Yeah, so we touched a little bit on it. Like, home values have gone up since the beginning of the year, which we saw come down 15% from where we were, I believe, April of last year. So we saw about a 15%, 20%, 25% in some areas of San Diego County, right? And that was like, wow, what's going on? And then since then, in January, we've seen home values come back up. And I think because of limited housing supply, right? Just for example, this is what I like to tell my clients is that even if interest rates are impacting monthly payments, we're still going to see a big demand because everybody wants to live in San Diego. But moreover that, let's say that there's, for easy math, 50 people that want to buy a home in San Diego. I know that's drastically low in comparison to how many people.
Boy, but
for sake of this example, there's 50 people that want to buy a house in San Diego. Even if more people aren't coming in, which we know there will be, if there's not 50 homes to supply those 50 buyers, if there's 25 homes to supply those 50 buyers, that means on average, two buyers are competing for one home. So naturally that they're going to push prices up. And that's what we're seeing is that there's fewer homes for sale than there are buyers in the market. And that's causing home values to increase.
Yeah. And when I'm speaking to people that are on the market, they're hesitant as far as, the inventory that's available because there's very little of it. Like I can honestly say that maybe here in the 91914, there's probably like 1 or 2 listings, if that. But over on the mortgage rates, what I have seen this year is that, at the beginning of the year, and I'll pull this graph up right here from January 6th, the average rate for a FHA was 6.417, and then for a conventional loan, it was 6.479. Now, if you follow the graph, and we'll pull it up on the video so you guys can see, you basically see that rates have trickled up a little bit during March at the highest of the last 3 months, but, cool off a little bit. And if you notice, it's a sideways trend. So rates have been staying pretty steady this year, but compared to last year, we saw rates skyrocket from previous years before. So right now, what I am foreseeing is that you see rates staying anywhere in the 5.5 to maybe 6.8 rate. That's what we can expect for the remaining of the year, and maybe a little bit higher in some days. But one of the things I did want to make clear is that, any given day, mortgage rates could be up or down 1/4 or 0.5%. So it's really a matter of, timing the market in a way that you're connected to your real estate expert to know exactly what's happening. Because if you notice what's happening with the economy every day, don't you feel like there's a new headline?
Yes.
With China doing something, with Ukraine getting more U.S. money. I just don't know how anything, is going to come out next week. So all you can do is control for what you do right now and just prepare yourself for the worst.
I think you make a good point. When we talk about like global economic factors, because a lot of people are wary of like what's happening with the dollar, whether it's like Silicon Valley Bank going under or like other countries coming together to form a new world currency or attempt to do so, or restrictions on oil. For all those reasons, people are looking to move their cash into real assets, whether that's in the form of real estate or precious metals, and for some people, cryptocurrency. And so I think that we're going to continue to see investors put money into real estate, and I think that's going to continue to stimulate our market.
No, 100%. I feel in the long term, like you mentioned earlier, there might be a down market, but there's always an upside to it. It's just cyclical. So moving on, I wanted to get into a few of the trends that you've been seeing in real estate as far as, what buyers are, doing and how they're handling themselves through this type of market. And as well, I'll share my insight of, what I've seen in the mortgage space as well. But I wanted to go ahead and ask you first.
Yeah, I think the biggest trend is going to be 3-2-1 or 2-1 buy downs. And sorry if this is something,
I think another one will fly.
You were going to talk about. So I'll allow you to kind of elaborate on it. But essentially what it is, guys, is that I can speak on the real estate side. So me representing sellers, if we see a slowdown in showings and offers, we have to make that home more attractive. And the way that we're able to make that home more attractive is by informing and educating our sellers that we have to be more lenient with the buyers that we are getting. So what we're doing is we're giving them credits or incentives for them to ultimately buy down the rate. But Brian, kind of share with us what that looks like.
Yeah. So I wanted to, and I'm glad you brought it from the seller's point of view, because on the buyer's side, we have to prep our our buyers that if we're going to be asking for this program, which does come at a cost, now this program, the seller needs to agree to pay for it, correct?
Correct.
And essentially, it isn't, a cheap product, right? So it does come out to be a few $1,000s depending on which one you decide to go with. But essentially, we prep our clients that if you're going to be asking for this, back in credits, you also have to make your offer enticing enough for the seller to want to kick back that incentive to be able to buy the house. So we tell our clients that, hey, look at the price point. If this is the main price point, let's say $850 on the house, how many people you think are going to be offering either that or a little bit above, right? And if you strategize your offer in a way that makes sense to the seller, you can have the offer a little bit overpriced, get your credits, and still net the seller their end goal and their price point that they were looking for ultimately.
Exactly. And so, for example, if you're buying an $850,000 home and it's going to cost $20,000 to get a significantly lower interest rate, maybe you offer $870 as long as the home can appraise, so the seller ultimately nets $850.
And the way that this program works, there's a 3-2-1 buy down, a 2-1 buy down, and a 1 buy down. And the simplest form is that the first year your rate will go down 3%, the second year will go 2%, and the third year will go back down 1%, and the last year you go back to your qualifying note rate. Yep. So essentially, those few years you get to ease into that bigger payment by getting that payment subsidized by the seller.
Right, with ultimately an intention of refinancing once rates actually do come down and fixing that for 30 years.
And one of the things that I don't know if you heard it, I'm sure you have, but for the viewers is that let's say in 2 years or in a year rates drop, right? Which I don't foresee, but in 2 years, let's say they drop and you have one more year under 3-1 buy down. Did you know that basically goes down as a principal reduction since it was already money allocated for that?
I didn't know that. That's really cool.
It's actually a benefit in both ways. So if rates come down, great. You get to keep some money, shave some off of your principal balance, and still enjoy the savings.
That's awesome.
So, there's different ways to skin the cat. I really just feel it's about getting informed and sticking to people that you understand what they're trying to explain to you in your terms, because right now in real estate, I feel there's a plethora of information, so many types of personalities, so many different people delivering this information. I feel you stick to, who's in your micro market, who you can trust, and ultimately you can relate to.
Mm-hmm. Yeah, there's 20,000 some real estate agents, and I'm probably more mortgage lenders. And so
throw a rock and find one.
And so it's really important that you gravitate towards somebody who you trust, somebody who you like, and somebody who you care for, because they're probably going to reciprocate that for you. I would say the most common mistake they have is pricing the home incorrectly. And the reason I say that is because the California Association of Realtors came out with a survey, and they put together this diagram that suggests that, or that states that if you were to price your home correctly at market value, it says that 60% of the individuals who can afford your home and that are looking to buy a home in your area, only 60% will come out and see it. If you overprice your home just by 10%, as small as 10%, those results are cut in half. So only 30% of the market will come out and see it. And, first impressions are really important. And if your home's sitting on the market, people begin to wonder what's wrong with it. So you really want to avoid that by pricing the home correctly. And by overpricing the home, you're really shooting yourself in the foot and chasing the market down.
Mm-hmm. That was good. All right. So over me, I don't work with sellers, but I do work with buyers. So I feel when, wanting to buy a house, one of the biggest mistakes that I do see is the buyer thinks that they could get approved for whatever amount they're looking to buy, right? And that means that they blindly go shopping for houses without sitting with a financial expert and going through their finances to know what they can actually afford through their debt to income ratio, which is going to determine what loan, what product, and what rate you basically will get from loan. So I feel basically doing your due diligence before you start shopping is the number one mistake people don't do.
Okay.
So for becoming a loan officer, I feel it's a lot different. A lot of people think it's a sales job, which it is, but I feel it's more on the relationship side, right? So what I mean by that is that you instead of going out and, talking to clients and try to, convince them that they should work with you or with partners, it's more about how can you cultivate a relationship, right? And if you're able to cultivate that relationship, build it over time, create value by helping them, accomplish things that they couldn't do alone, and with your help, they were able to. I feel that if you're that type of person, being a loan officer is going to be a good route for you because A, you're good with people. B, if you're solution driven, that's the name of the game. And ultimately, if you're able to make friends, that's going to be one of the biggest tools that I've used to my benefit to grow my business. So if you're looking for a line of work where you're okay with working with people, cultivating relationships, solving problems, and dealing with emotions, then I feel lending is definitely the side of real estate that you want to join.
Yeah. And I would say a lot of that is true in our side too. You know, it's like relationships over sales. But what I would say, if somebody's looking to become a real estate agent, there's a number of ways you can go about it. Ton of different personalities, ton of different ways to build the business. For me, it looked like treating my business like a job. And that meant that I knew when I was going to start and I knew when I was going to finish, and I knew all the things I needed to do in between. And staying organized, using your calendar and sticking to those things. And then also being devoted to your craft. You know, if you want to be really good, study. Like, take the time to learn things so that way you can educate people. And by educating people, they will trust you and they will work with you.
Yeah, I think it's a difference between you telling and you showing and explaining to them with the actual facts.
Mm-hmm.
So I'll share an embarrassing story for me, right? And I'm not going to mention any names, but I'll share the story with it, right? So I had a pre-approval, and I had this lady come to the office, and she was basically trying to show me her documents. But she had them stuck on her photos, right? So she's like, "Hey, I don't really know how to maneuver my phone. Could you please just look for the pictures there and send them to you," right?
I know it's coming next.
I'm like, "Great, all right, perfect. I'll check them out." Soon as I open up the phone, I pop up the photos, and I see a naked picture of her. And I'm looking straight at her, right? And I kind of grin and try to hold a straight face and not laugh, and I just immediately swipe to the right and give her phone back. For the longest time, I just kept that mental picture in my head, like, "Lady, I just seen you free and clear." That was probably that was probably one of the most embarrassing, funniest times that I've experienced in my mortgage career.
I don't have anything to match that, but I can say that I work with a lot of people who are facing foreclosure. I work with a lot of people going through divorce, so you can imagine.
You can find me on social media at Brian Lends Money, and on YouTube at the Brian Talks Money Show. So definitely hit me up there if you want to learn more about what's happening in the mortgage space, what's happening with real estate and money in general. Definitely shoot me a subscription and give me a follow.
Facebook, Instagram, TikTok, Kevin EHM, and then YouTube is probably going to be my more long form content. Same thing, Kevin EHM. You guys can find me there.
100%. So like we said, I wanted to keep this one short and simple and just give you a really good update of what's been happening, how you can get ahead, and, you know, the trends that can help you basically still get into a house and be able to afford the payment. So for anybody that's looking to buy, sell, or refinance, we'll make sure we drop our information in the description so that we can go ahead and get connected. And if there's any questions, please feel free to reach out to one of us. Kevin's very active on social. So am I. So please don't hesitate. And before we get off, Kevin, do you want to say anything or...
No, if you made it this far in the video, you obviously care about your financial position and where you're going. So congrats to you because you're taking the first step.
Appreciate you stopping by, Kevin. Like always, it's a pleasure, bro.
Yep, for sure.
Thank you, bro.
Thanks, guys.